Good afternoon, everyone. We welcome you to today's webinar conducted by online taxupdate.com. Brief information about the website is that it shares recent updates in GST, articles on important topic, etc. It has a note section as well, where GST law is presented in a simple language for professional, taxpayer, knowledge seeker to learn GST in a simple way. It has a note section-wise notes and judgment analysis as well under the title Logics. Online tax update share newsletter as well at a nominal fees. Please visit the newsletter page and share your feedback. Today's topic of the webinar is decoding GST amendment in Finance Budget 2024, which is recently held. And our today's faculty is Mr. C.A. Swapnil Jain, sir. Brief introduction about sir is he's a fellow chartered accountant practicing in the field of indirect taxes. He specializes in the field of GST law. He is frequent writer on GST matter and is well versed in all aspects of GST compliance, including registration, returns, audit, and litigation management. His article has been published in the journals of various study circles like DTPA, ACAE, and VIPCA. He is a regular speaker at various professional forums like National Academy of Customs and Indirect Taxes, that is NASIN, EIRC, ICAI, BBD BAG, VIPCA, and DTPA study circle. Apart from being a chartered accountant, he is a registered valuer and an insolvency professional. Currently serving as special invitee of VIP Road CA Study Circle, co-chairman of IDT Chair Committee of BBD BAG Study Circle, and a member of IDT Kolkata Studies Group. He has experience in handling GST compliance and litigation for various clients in sectors like real estate, manufacturing, to name a few. Now, without taking much time, I would like to request CA Swapnil Jain to take over the session. Over to you, sir.
Thank you, sir. Thanks a lot for the wonderful and the warm introduction. And thank you, Online Tax Update, for providing me an opportunity to discuss the finance bill proposals, particularly with respect to GST. And also, I would like to mention a word about Online Tax Update. It's a very helpful site. Even I came to know about this site around 2-3 months back. And it has a database of everything you want to search for GST, whether it's judgments or write-ups or the act itself. It's a one-stop solution for all your GST needs, I would say. Best of luck, sir, for your efforts. You're doing a great job, sir. I
Thank
wish
you.
you more success. Also, thank you, audience, for taking time out on a Saturday noon, wherein we have just finished the ITR filing, and we all must be tired with filing of this ITRs within the due dates. So, thank you for taking your time out. I hope I can add value to your knowledge. Okay, so let us start with the discussions. So if you see the Finance Bill 2024, the GST proposals, there was nothing new in the proposal if you had seen the 53rd GST Council meeting. Okay, so the proposals were a part of the 53rd GST Council meeting. So the 53rd GST Council meeting was held on 22nd of June, and we had the following circulars on 26th of June, and there were some circulars and notifications on 11th of July. And post that, we had the finance bill in 23rd of July 2024. So apart from the changes in the act, everything was done through the circulars and notification before the finance bill came into the picture. It was only the amendments that was required in the GST Act that has been done to the finance bill. So if you see the finance bill from the clause 110 to 153 of the finance bill, that speaks about the GST proposals. Okay, so our concern today is mainly GST proposals. So our discussion will be around these clauses only. So I am dividing the changes in GST law in 3 parts for easy understanding. The first would be trade facilitation. The second would be better compliance mechanisms. What are the changes in the compliance requirements? And what are the legal streamlining processes? Okay, so these are 3 buckets that our discussion would fall into. We'll take up this one by one. So under trade facilitation, the first change is the ENA, extra neutral alcohol, that is excluded from the GST purview. Earlier, the section 9 talked about the alcoholic liquor for human consumption. Now this has been amended to include the word undenatured, extra neutral alcohol or rectified spirit used to manufacture of alcoholic liquor for human consumption. So even ENA would be outside the purview of GST. Next is the activity of apportionment of co-insurance premium by the lead insurer to the co-insurer. So what happens if the in a case of co-insurance premium arrangement, if the lead insurer is apportioning a premium to the co-insurer, so that apportionment of premium won't be chargeable to GST. That is what is proposed in the schedule. The next is Section 11A insertion. So Section 11A basically talks about it. It gives the government the power to regularize any trade practice due to which the GST was not levied or short levied. So if you see the clause number 1112 of the finance bill, it talks about in case any tax was not levied or short levied due to a trade practice. Okay, so the government has the power on a recommendation of the council to regularize such non-payment or short payment. Okay, so a classic example of that can be non-payment of tax on the electricity reimbursement by the real estate developers on the common area maintenance. So that is a common trade practice which is being followed across the industry, that in case of a electricity reimbursement on a common area, no tax is being charged. So in that case, the government on the recommendation of council can regularize this practice, and they can say that okay, if your tax is not paid, okay, there is no requirement to pay the tax further, because it was a general trade practice which was being followed, and the government can regularize that trade practice. Next, very important is Section 70, subsection 1A. So, what was happening in case of summons? There was no provision in the law in which the authorized representative on the behalf of the taxpayer could appear in the front of the summons officer. So, a new section, Section 70, subsection 1A, has been inserted, wherein they are saying that any person summoned under subsection 1 can attend either in person or by authorized representative. So earlier there was only the option of the company director or the employee or the accountant of the company could attend the summon proceedings. Now they have amended the law to allow the authorized representative on behalf of taxpayer to attend the proceedings of summons. This is a very important changes that has been brought in, because in absence of this enabling provision to authorize representative to attend the summons, there was a lot of challenges that was being faced by the taxpayers. Next is amnesty scheme for interest and penalty. So I'll just take you through my write-up that I had prepared. Okay. I hope my screen is visible to all.
Yes, sir,
So,
it is visible.
okay.
Yeah.
So a new section, section 128A, has been inserted, wherein they are saying that if you pay the tax and interest, if you pay the tax amount as mentioned in the notices or the order for the financial year 17, 18, 18, 19, 19, 20, before 31st March 2025. So this date of 31st March 2025 was the date recommended by the GST Council. In the finance bill, there is no recommendation of the date as of now. We hope that the same date will be followed in the Act also. So what they are saying is if you have received any show cause or any order and you pay the full amount of tax as mentioned in the show cause or the order, then your entire interest and penalty can be waived off. This is a kind of amnesty scheme that the government has brought in to reduce the litigation and to remove the past pending issues wherein the taxpayer is willing to come forward and pay the entire tax in toto. Okay. So what are the key highlights of this section 128? We'll just go through it. So what are the orders, what are the show causes that is covered under 128A is, first is a show cause issued under section 73(1), not 74. Okay. So 73 show cause notices would be covered, but not 74. Show cause is issued, but order is not issued. Okay, so only the first stage of adjudication, that is show cause, that is issued, but the order is not issued. Second is 75(2) cases wherein the notice was issued under section 74, but after the order of appellate authority, the notice has been converted into section 73 notices. So even that issues will be covered under this scheme. The third is the order has been passed, but order is not passed by the appellate authority or division authority. So the first commissioner appeals order has been passed, but the appeal forum has not passed the order. The next is the order has been passed by the appeal forum, but order is not passed by the tribunal. Okay, so until till the time of passing of order by tribunal, the lower orders are covered under this scheme. What is not covered? Cases of erroneous refund. So if it's a case of erroneous refund and any show cause is issued or any order is issued in this regard, that is not covered. And if in case a taxpayer has filed an appeal or writ petition against a show cause or against an order, that writ petition or that appeal has to be withdrawn before we go into this scheme. That is very important. Okay, the taxpayer has to withdraw the appeal or the writ petition before he opts for this scheme. What is the tax period covered? The initial years of GST, 1st July 17 till 31st March 2020. So 17, 18, 18, 19, 19, 20. These are the 3 years which are covered under this scheme. What is the condition of the payment? The full payment of tax as per the notice or order has to be paid. So suppose I have a notice or order in which I have a multiple issue. I want to go for this scheme for a particular issue, and for the remaining issues, I want to litigate the matter. So that is not possible as per the wordings of this section, because the word uses full payment of tax as per the notice or the order. So until unless you pay the entire amount of tax as demanded in the notice or order, you can't go for this scheme. What is the due date of payment? Like I told earlier, the GST Council meeting had recommended date of 31st March 2025, but the finance bill has no mention of that date. They have said that date of payment will be notified. So, and what is the benefit that is offered in this scheme? And if you pay the entire tax amount by the said date, the full waiver of interest and penalty will be done, and all proceedings shall close. Okay, so there won't be any further proceedings against the taxpayer, and no requirement of payment of interest and penalty. Okay, but if tax and interest is already paid, if you already paid the tax or interest, no refund shall be allowed. So there is no refund mechanism. If you have already paid the amount, you cannot claim a refund. So this is very no, it's a discriminatory, I would say, scheme wherein the taxpayer who had paid the tax or interest, they are made to suffer, and the persons who have still not paid the tax amount or interest amount, they are at a benefit. So I recently got a case. What had happened? It was the order of section for financial year 17-18. Okay, the order was passed in October 2023. Okay, so the client came to me and said, "Sir, what can we do against this order, because the time limit has expired to file an appeal? So is there a way out?" And luckily, just 2 days before the client came to me, this 128 was proposed in the finance bill. So we had written to the officer that this is a section that is being notified in the future. So we'll avail the benefit of this section in the future. So request you to please not stop the recovery proceedings. And the officer was satisfied, and he said, okay, whenever the scheme is notified, you pay the entire tax amount, and there won't be any interest or penalty or any recovery proceedings against you. Okay. So any questions on section 128A, so we can discuss section wise. That would be better for benefit of all. Any questions, sir? We have from the forum. Okay. Somebody has raised hand.
Yeah, let me open then. Allow them to ask once again. Let participate. Milind Patil, sir, you have raised your hand. So you can speak, sir, now.
Yeah. Hello.
Hello. Yes, sir.
Yeah. That means what we get from this is the applicability will be only if there is an appeal filed. Correct?
Pardon me, sir. Your voice is little low, sir. Can you please speak louder, sir?
Do you get me right now?
Yeah, it's better now. Yeah.
Can you hear me?
It's better now.
Can you hear me? Okay. I mean to say the applicability will be only when an appeal is filed for this, correct?
Sir, also if show cause is issued, you can go for this scheme.
Only show cause in case of an order enters.
Okay,
In
okay.
case of an order, the appeal has to be filed, correct?
Not necessary, sir. If an order is passed
Uh,
and if you agree to pay the amount as demanded in the order, you can go for the scheme.
okay.
Yes.
Even if the order is under section 73(9), if an order is passed under section 73(9), and
Correct.
even if I don't file an appeal, I can go for this 128 days. Is it right?
Yes, yes, yes. Exactly, sir. Exactly.
Fine.
So
Thank
filing of appeal is not a precondition to go for this section.
you. Okay, fine.
And the
I'm
entire
confused about it.
objective of the section is to, sir, reduce the litigation. Okay.
Fine.
So if you go for an appeal again, that is increasing the litigation burden for the government, sir.
Fine, sir. Thank you. Thank you so much.
Okay. Thank you, sir. Thank you.
Yeah.
Any other questions on this topic?
A participant can raise their hand because we want to keep this as an interactive session.
Yes. Yes. Correct, sir.
Yeah. So Saurav sir has raised his hand. Okay. Saurav sir, you can speak now.
Yes. Hi, sir.
Hello, sir.
So, yes, so the condition which has been mentioned is there should be a full payment of tax as per the notice or the order. So
Correct, sir.
suppose if the notice has been issued, but let's say the no notice is issued for 5 points, and for the two of the points, I have we can refer to notices which are issued through the system generated, and out of the 5 points, two are already I've paid the demand for the same in the DRC. So now to apply this section, I need to pay the tax for only the three pending points or for all the 5 points.
So because you've already paid the tax for the 2 points, I am of the view that there's no requirement to pay the tax again for the 2 points. You only need to pay the tax for 3 points that is pending. Okay. Because
And if I have not paid, but the officer is agreeing with my submission for the 2 points, that the reply you are providing is satisfactory, then in that case, uh, uh, then also I need to pay the full tax or only for the remaining points.
no, sir, for the first 2 points you have already paid the tax, correct?
Uh, in not in this case. For
You're
the second,
talking about
suppose
another case you're
yes,
talking about. So
yes,
what I understand, we have got a notice for 5 points. Out of 2 points, the officer is convinced with your point of view.
yes,
And
yes,
and then for the 3 points, you want to pay the tax and avail this scheme.
yes, yes.
So in that case, because if you see the finance bill, the wordings uses full tax payment as required in the section in the show cause. So in
Okay.
that case, you have to pay the tax for the entire 5 issues, sir. You can't pay tax for only 3 issues and claim this scheme.
Okay, got it. So what I think we can strategize is that we can ask the officer to pass the order for the 3 points, and then we can pay the tax of the order.
Correct. That
Not
can
a
be
problem.
done. That can be done. That can be done, sir.
Okay. Thank you.
Okay. Thank you, sir.
Okay, sir. I think no more queries.
Okay.
Or
Okay.
still, if it's there, you can raise. The audience can raise their hand.
Okay. So coming to the next beneficial provision for the taxpayers is section 6, insertion of section 16, subsection 5. So to give a brief background of this section, why this section was introduced is the time limit to avail ITC for any financial year initially was 30th of September, and then it was I think 20th of October, due date of filing of September return, and then for 21-22 onwards it was 30th of November of the following financial year. So what was happening, a lot of notices had the taxpayer were receiving for delayed availment of ITC beyond the due date of section 16(4). Okay. So to close all these issues, and there are a lot of litigation that is happening in the high courts. We had a favorable judgment of M. Trade Links in the case of Kerala High Court, wherein they had said that this extension of 31st November would be applicable for the initial years also, not only for the current years, but for the past years also. So to reduce this litigation again, the government has notified section 16, subsection 5, wherein they are saying for financial year 17-18, 18-19, 19-20, 2021, if you have availed ITC till 30th November 2021, okay. So even for 17-18, you have availed ITC till 30th November 2021, you are eligible for that ITC. That ITC can't be disputed. Okay. And they are saying that that can be claimed in any return. So any 3B filed till 30th November 2021, you can claim the ITC, and that ITC can't be disputed. Okay, so it is very beneficial provision. It will close all many of the issues that was pertaining to section 16.4, because a lot of notices we had received for the even for the COVID period for 1920 also. If you remember, there was a COVID period, so the due date of claiming 3B was not extended. It was till September, and many taxpayers had claimed the ITC in the month of November. So now, by this notification, by this amendment, a lot of these issues would come to an end. So, any question on section 16.5? Because again, this is very important. The amendment that will affect all the taxpayers. I'm sure all of us would be having issues of section 16.4 for our clients. So, any questions regarding this section would be good for us. Okay. Yeah. Two people
Milind,
have raised hand.
yeah. So Milind Patil, Milindji, you can ask your query.
Okay, can you hear me, sir?
Yes, sir.
Yeah. Okay. Only one query in this. We are saying that this is for 17-18, 18-19, 19-20, 20-21, and 21-22, correct? Or
No, only 2021, sir.
2021 only, no?
Yes, sir.
Not beyond that.
Not beyond that, because after that the law itself was changed. If you see section 16.4, it was changed from post that.
Okay. So this is only up to 2021, not 21.
Correct.
Fine,
Sir.
sir. Thank you. Thank you, sir.
Okay, thank you, sir.
Okay. So Raji sir has a query. 1 second, let participate. Raji sir, you can ask your query. You can speak, sir.
Hello, am I audible?
Yes, sir.
Yeah, 16.5 is in the context of supplier or the, with regard to the invoice dates. Is it with regard to the supplier filing the returns or the
Recipient.
recipient?
Recipient, sir. So what you are, I'm good. Because I got your point, sir. Because many of us are receiving notices because supplier has filed that returns after the due date of filing of 30th September or November, whatever the date is. Correct.
Yeah. So because this amendment is about with regard to credit on the invoices issued, that means supplier invoices, right?
Correct.
Supplier invoices.
But
Okay.
it is talking about the recipient filing the returns within the due date of 30th November 2021.
That means even 16.4 applies. That means the recipient of goods should file return within the time stipulated.
Yes. Correct, sir.
Thank you, sir.
Thank you, sir. Thank you. Shall we move ahead, sir? No more questions?
No more queries. Yes.
Okay. Next is relief to IST input service distributor in relation to transition credit. So, in this regard, the amendment proposed is so in case an IST has received invoices even before the date of 1st July 17, okay, he is eligible to claim the transition credit on such invoices. So earlier the law stated that only for invoices on or after the appointed date, that is 1st July 17, that is eligible to claim as a transition credit. Now they are saying even if the invoice pertains to on or after the appointed day is 1st July 17, that invoice is eligible to claim as a transition credit. Next is reduction in the amount of pre-deposit against for filing of appeals. So I'll just share a chart for the easy reference of the audience. Yes. So see, as of now, the pre-deposit requirement that is there is, if you appeal before GST appellate tribunal, appellate authority, the existing pre-deposit is 10%, subject to maximum of 25 CR CGST, 25 CR SGST, that is 50 CR total. Now that amount is proposed to be reduced from 25 CR to 20 CR. The percentage is same, 10%, but the amount is 20 CR. So the maximum amount of pre-deposit has been reduced from 50 CR to 40 CR now. This is the first thing. And for appeal before GST, the existing pre-deposit was 20%, and the maximum amount was 50 CR. So total was 100 CR, which is now been reduced to 10%. The percentage has been reduced from 20 to 10%, and the maximum amount has been reduced to 100 to 40 CR, 20 CR each. So again, this is a huge reduction in pre-deposit requirement, which would benefit a lot of SME people, because the requirement of pre-deposit has been reduced drastically. Next is the time limit for filing of appeal before GST. So they have given the government to the power to notify the date on which the date of filing of appeals before GST would start. So there was a lot of confusion because happening in the trade fraternity, that when will the time limit to file appeals before GST would start. So as of now, there is no notification in this regard. The government has the powers to notify the date from which the time limit would start. Now coming to the compliance relaxations. The first is electronic furnish of TDS returns, GST 7. So in this, what has happened is they have made some minor changes in the section for the e-commerce operator, for the government organizations who are liable to deduct TDS, okay, and file GST 7. So one is they have said that the returns will be filed electronically, first of all, and the returns has to be filed every calendar month. So even if there is no deductions in a particular month, the government organizations have to file the TDS returns, even if it's a nil return. Okay, nothing major in this, just a compliance relaxation, compliance mechanism they have brought in. Next is the time of supply for reverse charge. Now this is very important because a lot of issues are happening in reverse charge time of supply. So the government has done a couple of changes in the act. One is section 31(3). Okay. In section 31(3), subsection F, they have said that they will I'll just open the act once. So 31(3) presently says that a registered person liable to pay tax under reverse charge shall issue an invoice in respect of goods or services, or both, by him from the supplier who is not registered on the date of receipt of goods or services, or both. Okay. So in this, they are empowering the government to give to notify a date, notify a period within which such self invoice has to be raised. So in case I am a reverse charge recipient, I have to issue self invoice. The government will have a power to notify a period within which I have to issue a self invoice. First of all, the second amendment they are saying, in the time of supply for reverse charge supplies. So in this, what they are suggesting is that in case of reverse charge supplies, the time of supply shall be earlier of the following dates. The first is date of payment by the recipient. The second is date of invoice by the supplier, in case the supplier is liable to issue invoices, like in case of GTA. In case of GTA, the supplier, the GTA provider, is liable to issue the invoices. So date of issue of invoices plus 60 days. Okay. And now they have inserted new sub clause wherein they have said that in case of reverse charge, the date of issue of self invoice shall be considered as a date of time of supply. Okay, so in case, so to break it down, in case the supplier is liable to erase the invoice, okay, like in case of GTA, the time of supply would be earlier of date of payment or 60 days from the following from date of invoice of the supplier. And in case the supply is not registered, like in legal fees or sponsorship charges, wherein the recipient has to raise the self invoice, in that case, the time of supply would be date of payment or date of self invoice. Earlier, there was no provision in the law which had mentioned date of self invoice as the time of supply, which has now been brought into act. So, any questions on this reverse charge time of supply? Okay.
Participant can feel free that so that we can keep it interactive. So if your query during the session itself, we can ask.
Yes, yes.
So regarding that Rajesh sir query, before this we had that on 16.5, section
Mhm.
16.5. So
Mhm.
sir was asking whether it is applicable for supplier also. So I think that he want to ask that 16.5 is for a recipient to claim ITC up to 20th of November, the extended
30th,
timeline,
30th of November, sir.
30th of November 2021.
Mhm.
So if the supplier has not filed within the due date during any of the period,
Mhm.
right? So within due date, within 30th November, so that also will be allowed.
So see, as of now, there is no provision in the law which bars such ITC. We are receiving notices for that, but strictly speaking, as per law, there is no provision in the law which disallows me such ITC. So I am of the view, even if the supplier has filed the returns after the due date, I'm still eligible to claim the ITC, subject to other conditions being satisfied.
I mean 16.4 conditions
Yes,
also has to be
yes,
seen.
yes, sir.
Okay.
Okay. Now coming to section 74A, which is a very important amendment uh, which has been brought in. Okay. So what was happening till 31st March 2024, the show cause notices were being issued under two sections, section 73, section 74. 73 was for non-fraud cases and section 74 was for fraud cases. Okay. Now the government is saying they're removing this classification of fraud, non-fraud. We'll have only one section, section 74A. Okay, from financial year 23-24. So I think it's 24-25, right? Just a minute. Yeah. So there's a typing mistake. It's the 74A would be from 24-25. Okay. So it's not 23-24, it's from 24-25. So now they're saying from going forward, we'll have only one section, section 74A, which will cover both fraud and non-fraud cases. Okay. No 73, no 74, only 74A. Also, under 73-74, there was no minimum threshold to issue notices. So we were seeing notices only also for 100 rupees, 200 rupees, and so on. But now under 74A, they have said no show cause notices will be issued if the amount is less than 1,000 rupees. So if the tax amount is less than 1,000 rupees, no show cause notices. Okay. One more important change that has been brought in is the time limits to issue order and time limit to issue show cause notices. So under section 73, the time limit to issue order was 3 years from the date of furnishing of annual return. And post this 3 years, before this 3 years, the show cause notice had to be issued. Okay. So the department had to issue orders within 3 years, and before 3 years, within 3 months prior to issue of orders, the show cause was required to be issued. Similarly, for section 74, the time limit to issue order was 5 years from the date of furnishing of annual return. And the time limit to issue show cause was 6 months before such order. Now they have changed the mechanism of determination of time limit. What they have said is the time limit to issue show cause would be 42 months from the date of annual return. So what we are seeing over here from was the time limit to issue order. We have said that 42 months from the date of annual return would be the time limit to issue show cause. And from that show cause time limit, we have 12 more months to issue order. So 42 plus 12, 54, and this 12 months can be further extended by 6 months on the approval of commissioner. So total 60 months. 5 years is the upper limit within which the entire proceedings of section 74A has to be closed. Okay. So under 73, we had a concept of voluntary payment before service of notice, wherein it is said that if tax and interest is paid before the notice is issued, no penalty would be leviable, no interest would be issued. And in 74, the relevant provision was if tax, interest, and 15% penalty is paid before the show cause, no notice would be issued. Similarly, in 74, they have maintained the same limits, wherein they are saying if it's a non-fraud cases, okay. So if you pay the tax and interest before the issue of show cause notice, no penalty would be charged and no notice would be issued. And if it's a fraud case, if you pay the tax, interest, and 15% penalty, no notice would be issued under section 74. Okay. Now, the next was the payment within 30 days. So under section 73 and section 74, there was a relaxation wherein if you pay the tax or interest within 73, within 30 days of issue of notice, no penalty would be charged. Now the proceedings would be closed. Similarly, in section 74, if you pay the tax, interest, and 25% of penalty within the 30 days of issue of show cause notice, the proceedings shall be deemed to be closed. But in 74A, the payment amount has remained the same. What they are saying is instead of 30 days, we'll give you 60 days. So within 60 days, if you pay the tax or interest, no penalty would be charged and the proceedings will be closed if it's a non-fraud case. And if it's a fraud case, if you pay the tax, interest, and 25% penalty within 60 days of notice, the proceedings shall be deemed to be closed. So the time limit has been increased 30 to 60 days. And if you pay the tax within 30 days of order, there was a relaxation in section 74, wherein they said that if tax, interest, and 50% of penalty you pay within 30 days of order, the proceeding shall be deemed to be closed. Now, this time limit of 30 days has been increased to 60 days in the 74A. So 74A says that if you pay the tax, interest, penalty, 50% of penalty within 60 days of order, the proceeding shall be deemed to be closed. One more important amendment in 74A is that if you had paid the tax in 73, you were eligible to claim the ITC. And in 74, if you had paid the tax, there was no question of ITC. But now this restriction has been removed. If tax is paid in section 74A, the ITC is allowed to be claimed. So even if it's a case of fraud, okay, you are eligible to claim the ITC if it is paid in section 74A. Any questions on 74, 73, 74, 74, sir?
Milind sir has a query. 1 second, let me allow sir to speak. Yes, Milind sir, you can raise your query.
Hello, am I audible?
Yeah, yes, sir.
What I mean to say is, when they are allowing the ITC in 74A, does that mean that if a Hawala operator is caught, okay, and the ITC has been recovered from him, that ineligible ITC has been recovered from him, okay? In that case, is that ITC eligible? That means the tax has come into the treasury.
So see, in 74, if you see, the restriction 17.5 has been done away with. Earlier 17.5 said that tax paid under section 74, 121, 130. Now they are saying only 74 and that too till 23-24.
Okay.
Okay. So there is no demarcation of tax paid under 74 if it's a fraud or non-fraud.
Okay.
So in my opinion, the tax should be eligible to claim as ITC.
because it has come into the treasury.
Correct, correct. And even there's no
Because
bar in
it
the
has come
law.
into the treasury.
Exactly, and there's no bar in the law that bars me to avail the ITC on such taxpayer. Maybe once the Finance Act is notified, maybe they can change this section because it's only a finance bill as of now. We might see some changes in Finance
Yeah.
Act, but strictly speaking, there's no bar as such.
Okay, that means it's not clear as yet.
So let us wait for the Finance Act. If
Okay.
it's the same,
Yeah.
if it's on the same line, there's no bar. If they change the some wordings in Finance Act, maybe then we have to revisit our proposal.
Are there any chances that they change it afterwards?
So not really until unless a strong representation goes from the industry or from the association, then only they can change.
Okay.
Otherwise, they won't.
Okay, sir. Thank you so much. Thank you, sir.
Thank you, sir. Thank you.
Okay, Raji sir has a query. Raji sir, you can speak now.
Yeah. In fact, I have no query, but I was just endorsing his viewpoint that 74A as of now allows credit in such cases. But as he rightly said, we do not know. I do not know. We do not know what happens when the finance bill becomes an act.
Correct, sir. Correct, sir.
I just wanted to endorse his viewpoint. That's it.
Thank you, sir. Thank you, sir, for endorsing my view, sir.
Thank you.
So mostly the finance bill becomes an act, right? With
Sir,
leti.
Sir, we have seen sometimes.
There can be changes.
Yes.
See, for example, 70. They may insert 74A in cases where fraud is involved.
Okay, such clauses can be added. It means.
Yes.
Those. Okay. Yes. These practical challenges may come. Whether the party is genuine or not, the ITC should be allowed to a genuine person only.
Yes. Okay.
Yeah.
So moving ahead now, some small changes that for e-commerce operators. So section they intend to levy penalty on only those e-commerce operators who are liable to collect the TCS. So section 122(1)(b) is proposed to be modified from 1st October 2023, wherein they are saying that the penalty would be leviable only if the e-commerce operator is liable to collect tax at source under section 52. So if there's no requirement to collection of tax at under section 52, the e-commerce operator won't be liable to penalty amount. Now there's some changes for exporters, wherein they have said that if my output is liable to export duty, I'm not eligible to claim the refund of the input so paid. So basically, the logic is the government applies export duty only on those goods or services which they want to discourage the exports. So if my output is discouraged to be export, I cannot claim the ITC refund of ITC on such input. Okay. So by this logic, they have said that if the output is liable to export duty, there is no refund of input and input services. So we have one more question, sir.
Yes, sir. Raji sir, you can speak, sir.
Yeah, actually, this restriction of claiming refund on ITC was already there. No, what is the new change that they have made today in this budget? No, it was.
Sir, it was not there, sir, initially. It has been inserted in the finance bill only. It was proposed in the accounting meeting, sir.
But earlier, if you read section 54, no, it was mentioned that ITC refund would not be eligible in case of supplies where supplies attracted export duty. It was there earlier also, even before this amendment. So I am just curious, what is the new addition that they have made in this budget?
Just a minute.
Please go through the 54. You please go through it. It is there, sir.
Yeah, I got it, sir. Just a minute.
I think provided proviso, it may be there in the proviso. I think I'm not very sure. That is the reason why I'm very curious about it. What new changes they have made in the
Okay. So earlier the restriction was only for refund of unutilized ITC. So it was talking about ITC refund. Now they have
Yeah, true,
also
true.
placed the same restriction on payment of IGST. So if I pay goods, if I export goods on payment of IGST, in that case
Yeah.
also there's no refund mechanism.
Oh, great. So this is the new addition because of this.
Yes, yes, sir. Yes, sir.
Oh, thank you so much. I have although I have read it, but I have never concentrated on this.
Yes, sir. There's small wordings they have changed, sir.
Oh, thank you so much.
Okay, because
Got it.
sir, because the proviso you're referring to, sir, second proviso, okay,
Yeah.
that is being omitted. That will be
Okay.
deleted. Okay, and new explanation will be inserted at the end of section, wherein they are saying ki if you export goods on payment of export duty, and whether it's a refund of ITC or refund of tax paid on such goods, no refund will be eligible.
Okay. So
So
now I understood.
the proviso you're referring to has been omitted.
Okay. So earlier it was restriction was only for ITC, but now the restriction is also for the when refund is claimed on payment of tax.
Correct, sir.
Thank you for
That
your clarification.
proviso deleted, sir, and explanation has been inserted in the section 14. Subsection 14,
Thank
sorry.
you. Thank you.
Subsection. Okay. And similar
Got
change
it.
has been done in section 16, subsection 5 of IGST Act, sir. So 5415
Okay.
and 16.5. Similar changes has been done, sir.
Okay. Thank you. Thank you so much.
Uh, Next is anti-profiteering provisions. So what they have done is that a couple of changes in anti-profiteering, wherein they have said that the government has will have the power to notify a particular date beyond which the anti-profiting cases won't be entertained. So basically, the logic of this amendment is that it has been 7 years of GST now, and these anti-profiting cases are not of much relevance nowadays. So what they are saying is that beyond a certain date, which will notify, the anti-profiting cases won't be allowed. And for anti-profiting cases, the appellate tribunal has the power to entertain such cases. The definition of authority in the section 171 has been amended to include the appellate authority also as the relevant forum in front of which we can apply the anti-profiteering cases. Yes, yes. I think I've covered all the provisions, all the amendments in the GST section. If anybody has specific questions or specific proposal to be discussed once again, we can take it up. Yes, sir.
Yes, Raji sir. Sir, you can ask.
Yes, sir. Please ask her.
I think he's okay. He's there. Okay.
I think yes, he's there,
Let.
but no, he's there, sir, but he's not able to ask the question. I think.
Okay.
Sir.
Now,
Okay. Audible. Now, okay. In fact, I think there was some connectivity issue here.
okay. Tell me, sir.
No, I am not asking questions, sir, but a point I am trying to add that, at present, anti-profiteering authority is Competition Commission of India.
Now that has been changed to
CCI.
correct.
Okay. Now that role is entrusted to the
Tribunal, principal bench,
principal
sir.
bench, Tribunal Delhi. Yeah.
Okay.
Yeah, I'm only adding the point to what you said, sir. Nothing more, no question.
Correct, sir. I think I've covered all my points.
Thank you.
Okay. So, participant, you can ask your query now on any point or any amendment which you have a query on that. You can ask. Yes, Patil sir. Oh, sorry. Patil sir has asked.
Hello.
Yes, Patil sir.
Yeah.
Yeah.
Am I
Yes,
audible,
sir.
sir?
Yes, sir.
Yes. Yes.
Yeah. This is not a query. Firstly, I would like to thank you
Thank you.
for updating us. There is a request, first of all. The chart that you have shown on the screen, are you going to share it?
Yes, sir. I'll just share this my PDF
Yeah.
to sir,
Yeah.
and so I can circulate in to all the participants.
Yeah. That would be nice of you. So
Yes,
thank you
sir.
so much.
I can drop the PDF in the chat box also.
Okay, fine. That will do, sir. That will do.
So, but the chat box has no option to drop the attachments, sir. I'll just share with
So
Ganeshan, sir.
our email ID is there with Mr. Ganesh.
Yes. Yes.
Ah.
I will definitely share
Yeah.
this with you. Yeah.
So,
With everyone.
thank you. So
Yeah.
yeah. Thank you.
Any query from the participant or on any point?
Raj Reddy sir has raised
Yes.
his.
Yes. Yes, sir. Please.
Yeah, I have no query, but it's a wonderful presentation. All that I would say is that a beautiful presentation you made and nicely clarified.
Thank you, sir. Thank you, sir. Thanks a lot.
Yeah, thank you.
Thank you, sir.
Ganesh ji.
Yeah. Thank you, Raji sir, for keeping the session interactive.
Yes, sir.
By contributing as well as asking query both.
Yeah, one question.
So what
There was
happened?
some activity issue with me. You were asking something about 16.5 on my behalf.
Yeah. Actually, later on, I was thinking that 16.5 is from a recipient point of view, more sort of we can say to claim an ITC, that extended time period is given. But what if the supplier has filed the return beyond that time period? Means
No,
on
that is
every financial year, 30th initially 30th September was the due date initially. So if recipient was missing those deadlines, he was not allowed to claim ITC. But now with the provision, the 30th November 2021, he can claim. But what if the supplier has missed that timeline of September? So
yeah,
maybe, sir, you were pointing out
was
that.
because there the provision is about issue of invoices by the supplier, obviously.
Yes, sir. Supplier would have raised before also, but if the recipient has claimed through 3B and filed it later on after the 30th September, then he would not. He would disallowed. No, he was not allowed to claim that credit.
So,
But
but
there is some
this is
we
what
need to.
department is doing, but there is no provision in the law to bar such ITC. We are receiving notices on this matter, but filing of return within the due date by the supplier is nowhere a condition to claim the ITC by the recipient. That is what my humble view is.
Okay. Maybe
That
they
is
are
what,
referring to 2A or something because 2A would populate that detail, and 2A if detail is not there, then how that ITC will be corroborated?
so, but for the
The
initial
focus.
years, yeah. Please, sir. Reddy, sir, please continue. Reddy, sir, you're saying something?
Is on recipient or the supplier. The focus of the amendment is aimed at recipient or the supplier.
Sir is talking about supplier.
I think
Sir, question is supplier didn't
supplier.
file
Okay,
his
okay.
GST one within the time limit of September, November, whatever it is. So, shall the ITC claimed by the recipient would be disallowed? Correct, sir. That is what your question is.
I think section 16.2 there is one mention about conditions regarding 4 conditions with regard to availment of credit.
Yes, sir.
You please see, sir, there are he used 4 times there. He shall file return, he shall be in possession of invoice, he should receive goods. So he is used 3 times there. So
Okay.
D, with regard to D, I think he is the supplier, not the recipient, as many of us think.
He should
16
file.
to
He should have filed the return, that one, na,
The
sir. He should have
recipient.
filed.
The D talks about the recipient.
That's what I'm saying. Whether that he is the recipient or supplier.
Recipient, sir, recipient.
No, if you read the C, C above, just before it, if C is talking about supplier.
Even D, because D starts with he has furnished the return under section 39. Okay. So
You read C, sir. Read C. Read C.
Subject to provision of section 41, the tax charged in respect of such supply has been actually paid to the government either in cash or through ITC in respect of said supply.
So who is paying? Supplier is paying. The condition is that supplier must pay the.
Correct.
So
supply.
So when after C comes D.
Okay.
So I personally think that D is about supplier filing the return, not recipient filing the return, as many of us think. I personally, I may be wrong also.
Only, sir, I got your point, sir. But what I'm saying, but if you see clause A and B where he is used, okay, that talks about the recipient.
That is true. A and B is about recipient. C and D is about supplier, in my view.
Sir,
I know
C is about supplier, but D is of recipient because section 39 they are referring, sir. He has furnished the return under section 39.
Even supplier can furnish.
Even supplier file return also should file under 39 only.
39, sir, 3B only comes under 39, right, sir? 37, under section 37, GSTR 1 comes. So if under section 37, if they would have mentioned, then it is a supplier. But 39 means it would be recipient only, na, sir?
No, sir. See, tax should be paid and return should be filed.
Right.
So,
okay. In that point of view,
obviously return should be filed.
Return should be filed.
Anyway, this is not academic question only.
Sir,
for some kind of food for thought, because I know many would think that D is only about recipient. I'm quite aware that out of 20 people, 19 people would think that way. That is what is my experience.
I have one more submission in this regard, sir. With the word used "and" is because D is the last subclause of section 16, section 16(2). That is the reason "and" is used before D.
I agree.
So,
of course,
but
that's what I'm saying, sir. That is what I'm saying. My view may be wrong also, I'm saying. That's why.
No, but also, it's good to learn new perspectives from the different audience, that what can be different interpretation of the law.
True.
Because maybe today you have taken this interpretation, maybe tomorrow department can take this interpretation.
Yeah. So, overall, excellent presentation, sir.
Thank you, sir. Thank you, sir, for the kind words, sir.
Yeah. So, Ganeshanji, excellent. You have arranged a very good faculty.
Thank you, sir. Thank you.
So, all the best to both of you.
Thank you, sir. Thanks a lot. Thank you. Sir, I will share the PDF to you over the WhatsApp right now.
Okay. Yes,
sir. You can circulate to the audience, sir.
Yeah.
Fine, sir.
Thank you.
Yes. Okay. Thank you, audience, who have taken time out of your busy schedule to learn something and also allowing us to share something. So until we come with the next webinar, thank you from Online Tax Update and from Swapnil Jain sir also. Thank you, Swapnil sir, for taking out your time and sharing your valuable knowledge with us. Thank you.
Thank you, sir. Thank you all.